Hello, everyone. Welcome to, and I'm coming in hot this week because I am seeing people absolutely losing their minds online about what is going on in the market right now as everything crashes due to the uncertainty surrounding the global economy that the war against Iran has caused. Now, I'm not criticizing people like Freedom Knight. So if you're watching, please don't think this is an attack. You're always welcome here because I perfectly understand how hard it is to watch something you own lose value on paper. It's never a great feeling. But speaking from the point of view of an analyst and a person who was able to retire at 38, which is why I focus so much of my content on planning for retirement, I have to point out that if you're freaking out about a paper loss on something that could have only been taken over the last 89 days since gold was never as high as it is right now when measured in US dollars at any time in its history before December 22nd, 2025. Then I'm here to remind you that none of the fundamentals for gold and silver have changed since the end of January and that you shouldn't waste this pullback. A pullback that is happening on the backdrop of an all-out market correction, as you can see here with gold still being one of the few things other than oil stocks that's still up on the year. And why this is so important to see and understand is because if there's anything I know about gold and silver, it's that this is when they enter their final leg up before making a more significant pause. And that's exactly what I want to talk about in this video because I am aware that some of you think this is some kind of coping mechanism to deny the end of the bull run in precious metals. In this video, I will not only show you how gold and silver perform during periods of high oil prices, but I will show you how they perform during recession and periods of deflation where prices eventually start to go down as a consequence of recession and economic hardship. And I'm going to finish this video by showing you all that I've spoken about a market crash on the channel before and remind you all about why it's absolutely necessary to have this crash before we enter the final leg up for gold and silver. So watch to the end for that because I think many of you absolutely need to hear what I have to say in that part of the video. Now, just before we start, whether you are a buyer of gold and silver like me, and I bought at the end of last week, or if you're a seller like Freedom Knight, whose comment I shared at the start of the video, please remember that you're going to get the best treatment on both sides of the transaction from Summit Metals at summitmetals.com. Their prices are great, their customer service is professional, and you can be 100% sure that what you buy from them is authentic. No scams, no fakes, and for people selling that, you will get a fair price for the metal you have. And what's more is new customers can get 3 ounces of silver at spot. Check out the link in the video description to find out more at summitmetals.com. So jumping in, I'm getting a lot of comments and questions from viewers on the topic of oil and the status of the gold and silver bull market. Now, some of the comments are nice, and as you can see in this comment and reply from another viewer, some are a little more critical, which is perfectly fine because when I started this channel in 2021, it was less than 1 year before the interest rate hikes of 2022 that brought gold and silver prices down. And people said it was over for gold and silver then. But what it ended up being was a pause leading into a huge breakout for gold that started 2 years later. And I'll repeat exactly what I told my viewers in 2022, and that is this is not over. People who are saying that it's all about oil now and that gold and silver prices can't stabilize in this environment, especially with the Federal Reserve getting ready to possibly increase interest rates, either don't understand that gold and silver had some of their best years when oil prices rise significantly. And this chart here shows you gold and silver performance in the 5 years where oil price has risen the most since 1970, including this year's performance so far, which clearly doesn't line up with the trend from the 1970s or the early 2000s, at least not yet. Or the critics don't realize that the market cannot handle and will not get significantly higher interest rates, as I showed you all in my last video, with interest payments on the U.S. national debt nearing $1.3 trillion per year. Now, with the Federal Reserve just this past week adding another $10 billion to their balance sheet as they buy up U.S. debt themselves in a desperate attempt to keep rising borrowing costs down in support again of the U.S. government and private banks, which are facing a private credit crisis of their own. Now, with that said, I suspect some of these people who all of a sudden have fallen in love with oil were the same people who said it was a bad investment just months ago. Because sadly, in 2026, our attention spans have become so short that we hardly ever focus on anything beyond what's happening right now. which in the world of investing and preparing for retirement, which is the core focus of this channel, is the wrong moment in time to focus on, since, in the famous words of hockey player Wayne Gretzky, you need to prepare for where the puck is going to be, not where it's already been. And with US debt continuing to rise and showing no signs of slowing down, with the Pentagon requesting an additional $200 billion of unbudgeted money from the US Congress to fund the war against Iran this past week, what I think you need to prepare for, and what I'm preparing for personally, is the financial catastrophe that's on the way, one that will undoubtedly make this recession, which I think we've been in since early 2024, worse, much worse, potentially dipping us even into depression, which has some viewers like Delta Charlie concerned that precious metals demand could be impacted, specifically silver. Now, just before I talk about gold and silver performance during a recession or deflationary period, I want to point out that the situation for silver is much different today than it has been during any other recession in the past, in that a slump in demand does not change the fact that more silver is in demand and being used up than can be supplied to the market. This is a fact that even a minor slump in demand cannot change. And it's why, at least in my opinion, we saw members of Congress like Debbie Wasserman Schultz, who just so happens to be on the Critical Minerals Subcommittee, suspiciously buy Hecla mining stock in 2024, leading into a very curious period for the US-based mining company, where they sold silver in the last 3 months of 2025 at a higher price than spot price, which was an average of about $55 an ounce for the period, compared to the nearly $70 per ounce they got when they sold their silver, leading me to believe that the United States government is rebuilding its strategic silver stockpile, and they're paying above spot to secure the silver they need to do it. And that's why I am not too concerned about silver by itself, or even concerned about silver going back below $50 an ounce, especially knowing that the Federal Reserve, the US government, and American voters have little patience for an economic downturn, especially in an official capacity, and will not hesitate to aggressively cut interest rates, just as we've seen done every single time during a recession since 2000, which will act to boost gold and silver prices as we feed our addiction to cheap and easy money. This moment is here, ladies and gentlemen, and it will continue even if we hit pause on it for a few months. And that also applies even if we see a momentary period of deflation. So falling prices, which since the 1971 end of the gold standard has happened only once, and that was in 2009. And gold and silver, as you can see here on the screen, were just fine. So just like I didn't waver from the path in 2022, when interest rate hikes created a temporary pause in the precious metals bull market that we started back in 2019, I am not quitting in 2026, because even if interest rates don't get cut, they're not going much higher than where they are now. And ultimately, it's real interest rates that matter most. It's why when real interest rates were positive between 1980 and 2002, metals were in a bear market, and why metals have performed so well since 2002. And whether it's the Federal Reserve lowering rates to get us into that negative real interest rate environment, or simply higher levels of inflation that cause current real rates to go negative. Real negative interest rates are bullish for gold and silver, full stop. Now, just before we get to what history tells us about the final phase of a metals bull market, please remember that gold and silver are great, but so is land. And if you've wanted to buy some land, which I think is a must-have, but you've been having a hard time getting started, please remember that channel partner Land of Land can help make that happen both easily and affordably. They have great properties, green properties, many of them close to lakes in states across America, including new lots in Colorado and Texas, with many starting right around $1,000. They accept credit cards for payment and even run auctions where you can scoop up great properties at low prices. So check them out. I will leave a link to their auction in the video description below. It's free to look at. And remember that by using the code BALDGUY, you get $300 off your purchase to buy something. The Federal Reserve cannot print, and that's landofland.com. Check them out. So moving on. Although this entire video has been inspired by your comments, and I encourage you all to leave your thoughts and comments in the comments section below. I read them, and I feature one comment or question to appear in every single video I do. This last one from Rem Guy is maybe the most important one, because it brings attention to the fact that we are in the early days of an overall market correction, at least until we get some news that shifts market sentiment and gets people thinking about the potential of lower oil prices and the possibility of more Federal Reserve rate cuts over the short term. And this crash situation has people worried that the case for metals is now become a hopeless one, as they will crash along with everything else. Now, as we look at a heat map of the stock market's performance over the past week, admittedly, the situation looks ugly, but I want to remind you all that this is the precise moment that we've been waiting for and have discussed already a few times on the channel. For example, back in October of last year, when I sat down with Jordan from the Daily Gold YouTube channel, and he said this: bull markets and hard assets, gold, hard assets, commodities, typically they begin after an end to the secular bull market in US stocks or the S&P 500. Now, there is some overlap. We are seeing some overlap now, which is very similar to the 60s. But if you think about it like this, okay, when did the secular bull in US stocks end? In the 60s and 70s. That was at the end of 1968. So you had another 11 plus years after the secular bull in stocks ended for hard assets to perform in their own secular bull. You go back to the 2000s. The secular bull ended in 2000 for the U.S. stock market. And when did the secular bull end? The following in commodities in 2011. So that was another 11 years after the fact. Now, I cut it a bit short there, but what Jordan went on to say is that based on those cycles and assume
bull markets and hard assets, gold, hard assets, commodities, typically they begin after an end to the secular bull market in U.S. stocks, so the S&P 500. Now, there is some overlap. We are seeing some overlap now, which is very similar to the 60s. But if you think about it like this, okay, when did the secular bull in U.S. stocks end in the 60s and 70s? That was at the end of 1968. So you had another 11 plus years after the secular bull in stocks ended for hard assets to perform in their own secular bull. You go back to the 2000s. The secular bull ended in 2000 for the U.S. stock market. And when did the secular bull end? The following in commodities in 2011. So that was another 11 years after the fact.
Basically everything and everyone around the world, just like the financial crisis did back in 2008. It's precisely this correction and the dominoes that are going to fall as a result of it that will trigger the next and what I think will be the final leg up for gold and silver before we take a longer pause. And for the critics, this is not a cope. This is not an excuse or moving the goalposts. It's precisely what many people in the metal space have been talking about for the last 2 years. And although I admit the pullback has been deeper than many expected, the truth is the upside that we got heading into January exceeded the expectations of most, resulting in an equally spectacular pullback. But despite that, gold and silver are still holding up very well, with silver at the number 3 spot on this list of top 10 investable assets ranked by market cap, with gold and silver together making up 62% of the value of everything shown on this list. And what's important to note is that is significantly higher than where we were back in April of last year, when tariff fears resulted in a major market pullback and metals were still growing their share of value on this list, with silver, as you can see here on the screen, still back in the 8th position. And what I want to say here is, just as higher rates in 2022 or the tariff scare of 2025 weren't the end of the gold and silver bull market, which again, I've said started back in 2019, this bull market still has a long way to go. And this is our 2008 moment. And no, gold isn't going back to $2,000 an ounce like some had hoped for. And silver isn't going back below $20 an ounce, as many had said would happen once we got our 2008 moment. And I can, pull up plenty of comments from early 2025 showing people claiming they would buy silver below $20 when the 2008 style crash happened. But the fact is the numbers have changed. And yes, there is a pullback right now, even a market crash, and there will be more along the way, to be sure. But remember, you are in direct competition with major institutions like central banks who are stacking gold and never waste a good pullback. as well as governments like the United States of America, who are presumably buying up silver and paying above spot to make sure they can get it in a market that doesn't have enough supply. And this is why I am waiting this turbulence out and buying more while I can, because this next leg up is going snorts to be even bigger than the last. And there's no telling when it's going to start and how quickly it's going to take off. So with that said, that's it for this video. Please remember, if you enjoyed the content, to leave a like below, leave a comment, leave a question. You never know, it may appear in a future video. And if you think this content is important and needs to be seen by your friends and family, please don't be shy. Share this link with them, as it helps my channel grow. And until we see each other next week, I want to encourage you all to take care of yourselves and take care of each other. See you in the goodbye.